I'm going to kick it off just by saying that our goal today is just very informally to help emerging brands in the three, what we think are the three critical areas of insurance that they need to protect their brand. Those are product liability, recall, food safety, and supply chain. And I'm really pleased that Michael Lieberman, who's our practice leader at Foa Son, has agreed to have this conversation with me in a way that we are trying to take insurance, which could be highly technical, and talk about it in a way that is practical for the CEOs, C-level execs, and the founders of the brands that Naturally New York serves. Michael's been our practice leader for a decade now, and he's helped our company emerge as a leader in the space, helping over 150 food and beverage companies manage risk, and most importantly, prevent any surprises that could interrupt your profits and your growth. And so I'm just going to jump right in. My role, Brad, Hamburger is similar to Michael's. I've done this for about 30 years, working with food and beverage brands, and my areas of expertise are in wine, hospitality, and CPG, as well as the natural space. So Michael, let's start with product liability coverage. What typical claims does it cover, and what do brand founders need to know about what it doesn't cover?
Yeah, thanks, Brad. Thanks for the intro. And Adrian, thanks for setting this up. Really great to be here. What I'd like to do before even answering that question, I don't know if there's, maybe if everyone could put themselves on mute, because there is a little bit of reverb coming back. But I want to, you mentioned it, Brad, there's three critical areas of risk. And when we're working with our food and beverage clients, it's important for them to know that there are various exposures, right? There are so many areas of risk that we deal with. And when we deal with our clients on an individual basis, we touch on all these areas, whether it be directors and officers exposures, whether it be cyber liability, employers liability. But for the purpose of today's chat, we really want to focus on, like you said, Brad, the three critical areas of risk. And we'll start with liability. So getting back to your question, Brad, what does liability coverage do? What are the typical claims that's covered by liability insurance? But also, I want to talk to the brand founders about, what does this coverage not cover? I think that's equally important. So for any of our emerging food brands that we deal with, liability, it's a great starting point in the build out of their risk management foundation. And it's one of the three critical legs of our risk management stool to create that very solid foundation. But liability insurance, it's a main coverage required by a number of the buyers. So while it does a great job of transferring certain liability risk in the food space, it also becomes a critical selling point, just because there are so many customers out there who will require food brands to maintain liability insurance in order for them to be a qualified vendor. And while coverage under a liability policy has many nuances, I think the most critical thing for brand owners to understand in the food and beverage space is that this is the coverage that you have to protect yourself and your company, your brand, against claims of bodily injury arising out of the consumption of the food products or beverage products that are sold by you. Now, with that said, these claims are few and far between, but when they do happen, they are catastrophic in nature. So to have this protection, which is going to give you protection for your defense costs, in defending yourself against a claim of bodily injury, illness, or death. It's also going to provide you protection for the settlement awards that are awarded in those cases. But there are a number of exclusions that brand owners should be aware of. I think the most, and Brad, you can probably attest to this, the most overused word in the insurance industry is comprehensive. A lot of brokers and agents will say, hey, this is your comprehensive general liability policy. Giving the notion that everything is covered, but there are some key exclusions that food executives need to be aware of when purchasing this coverage.
So that's a great place, and I want to welcome the people who just signed on. We just started, and we're talking about the three most critical areas that brands need to know about and have as they emerge and grow. The three most critical areas of insurance coverage, and talking about liability insurance. So, Michael, with liability insurance, comprehensive is overused, but what do the brand founders need to know that it doesn't cover?
Well, I think the main thing that I hear from food executives, and again, it may be best if everyone just puts themselves on mute for the purpose of this because there is a little bit of reverb. But the biggest misconception out there, and it happens quite often, is that liability insurance, if you purchase liability insurance, that it's going to cover you in a situation of product contamination or product recall. And that's the furthest thing from the truth. And look, product contamination and product recalls, it is a big concern of food companies, rightfully so. But to believe, and shame on the insurance industry for sending out this message, but to believe that a liability policy will protect you in that situation is just the furthest thing from the truth. There are a multitude of financial risks related to a contamination event or recall event that just fall outside of a product liability insurance policy.
One thing that we've talked about in the past, but I think it makes good sense to mention it now, is the insurance companies probably are to blame because many liability policies in the past had a coverage that they called withdrawal expense coverage, which was extremely limited, and now it's almost extinct. And maybe do you think that is the reason why a lot of people are confused about what product liability doesn't cover?
It could be part of the problem. For sure, these liability policies, as you said, they would have this product withdrawal expense coverage, and food executives would believe that would provide them the recall coverage that they need. But when you really peel the onion of the coverage verbiage, you would have to be in control of the manufacturing process in order to trigger that coverage. In essence, you would have to have your own processing facility where you process your goods, and we're responsible for the introduction of that adulterant into your food product. Now, we know that the Naturally family of companies, for the most part, they're using co-mans, right? So they don't own the manufacturing process. So that coverage doesn't even trigger in most of the scenarios. But again, when you're thinking about all the types of financial risks that accompany a product contamination, and again, we hope this never happens to our food clients, but you have to prepare for it. And if you ever find yourself in that situation, there are just a multitude of financial risks that wouldn't be covered by a liability policy, even if you had that product withdrawal expense coverage included under a liability policy.
So this is a good time to kind of transition to the other area we wanted to talk about, which is recall coverage and what does it cover? You mentioned that financial risks related to a recall event or a voluntary withdrawal of product fall outside of liability insurance. Talk about recalls, voluntary withdrawals, and what does a recall policy typically cover? And maybe you could also talk about the evolution of recall policies and how they're a lot less expensive than they used to be.
Yeah. So again, if we think about our risk management stool, to have a solid stool to sit on, you need 3 strong legs at a minimum. We touched on the first leg, liability insurance or liability exposures. The second leg is this contamination recall exposure. And when I spoke about the liability policy not covering certain financial risks connected to contamination recall insurance, through the proper design and implementation of a standalone product contamination recall policy, brand owners can fill those gaps, right? They can fill that risk. So a well-designed contamination and recall policy, it will provide food and beverage brands with reimbursement for all of those first-party financial risks that are connected to a recall event. So what are we talking about? we're talking about, number one, very clearly the value of the contaminated products, right? So if you have $500,000 worth of product in the stream of commerce that needs to be destroyed, these policies are going to provide you the financial protection for the value, the replacement value of that product. But you're also going to run into a lot of expense just to bring that product out of the stream of commerce. You're going to have freight expenses, and we all know how expensive freight is these days. You're going to have testing expenses, destruction expenses. A very important element of this coverage is the loss of profit relating to or resulting from a recall event or a contamination event. If you're in the unfortunate situation where you have a recall, and if it's well publicized, there's a good chance you may lose some customer goodwill. So you may have a prolonged period of business interruption and loss of profit. So again, these policies can be designed to cover that business interruption for a period upwards of 18 months following a recall event. And what's really critical for our food brands, especially those who are smaller in scale, is that these policies, they provide you access to recall experts. So when and if you believe you're in a situation where you may have to recall, it's not even a certified recall event yet, you just think, hey, we may have an issue. Through these policies, you will have access to crisis response experts who can come in and serve as part of your recall team to help determine, do we have a recallable event? If so, how much do we need to recall? How do we announce it to the public? And how do we work with the FDA or other food regulatory agencies to do this properly? So it's a huge value. So you're buying protection not only for the financial limits that you're buying through the policy, but you're buying the coverage. Your premium goes towards bringing in that expertise to help serve you in that time of need.
So you mentioned, I think there's all these myriad of expenses that we know occur because we've lived through these recall events with our clients. Maybe you could talk a little about the expenses suffered by downstream customers and how they can impact the brand and the company. And along with that, the evolution of FSMA and how has that impacted, the outlook of our brand founders and what their responsibilities are.
So I failed to, you asked me beforehand, Brad, about the evolution of these policies. Let me start there. The evolution of these contamination recall policies, they were really built to focus on the first party expenses. So your own financial losses, your recall expenses, the value of your product. But what was missing in this equation was the downstream customer expenses, right? So you're selling to a supermarket. That supermarket is then using their labor to pull product off the shelf to destroy that product. What does that supermarket chain do? They send you, the brand owner, a very large bill. And again, going back to our first leg of that strong stool, liability insurance does not cover those third-party expenses. And the first generation of product contamination, product recall policies did not cover the third-party expenses related to recalls. So the evolution of these policies, we are now able to design in coverage for these downstream expenses. So when that supermarket does send you, the brand owner, a big bill for their expenses suffered because of your product recall, there's now protection under these standalone product contamination policies to protect you for that. Now, what we've also seen in situations, and is brand damage done to the customer, right? So if that customer, if it's a large supermarket chain and they happen to be in the news because of your product that's being recalled, they can sue you for their loss of goodwill, the damage to their brand. Again, these policies can, even though they are really meant to be a first party protection policy, they can step up and be designed to fill the gaps of those third party exposures that you'll face downstream. Now, as far as the evolution of these policies and a lot of what we do at Foa Son to focus on bridging the gap, right? Bridging the gap between what are the real exposures that our food and beverage clients face on a daily basis? What's the food safety regulatory environment? And then you have insurance over here. And insurance may not always speak the language of food regulations and real risk. So in order for us to, not, try to cram that round peg through the square, or the square peg through the round hole, what we've done here is we've developed policy language for our clients that's bespoke. It's manuscript language that really works hand in hand. An example of this would be, I think people on the call are probably somewhat familiar with FSMA. They're somewhat familiar with the Food Safety Modernization Act, right? So the acronym is FSMA. It was rolled out in 2009. It's been rolling out ever since. And one of the biggest exposures of FSMA to food executives is FDA's mandatory recall authority. And what this means is that FDA now has greater authority to mandate recalls based on the reasonable probability of adulteration. So what does that mean? There's something called, the industry will refer to it as swabathons. FDA officials will go into food facilities. They'll take 100 to 300 samples of food contact surfaces within food facilities. And if they find any adulterants like Listeria, Salmonella, even if they don't find it on the food product itself, they just find it in these food contact zones, they now have the authority to mandate a recall under FDA's mandatory recall authority. So when you think about that situation and how insurance, the first generation of these contamination recall policies, it would not respond, because these policies would only respond if the product itself was adulterated or contaminated. It wouldn't respond if just the environment was contaminated. So we've now built a bridge at FOA to provide our clients with that protection in those types of situations. That's just one example.
So the takeaway for our brand owners here today is that there's great recall insurance available. There's a lot of insurance companies who will offer it, and the coverage can be tailored to the specific needs of the brand. But I guess one of the things in the naturally New York universe and overall is that most of them, as we talked about earlier, use co-manufacturers. And so do they provide any coverage? And what does our brand owners have to do with regard to food safety when we're not controlling the manufacturing process?
I mean, all great questions. I wish I could be more specific with my answer, but the answer to whether or not co-mans have their own insurance, it really all depends on the co-man that you're dealing with. The answer should be yes. But this is, when working with brands, this is really a critical area where we push our brand owners to work hand in hand with their co-mans to determine what type of insurance do you have. Can we be added as an additional insured on your policies? And also, I know there's some great legal, the Giannuzzi Group is part of Naturally New York. There's some, you need to speak with your attorneys when you're going into these co-man relationships. There's nothing more important than that co-man agreement. Forget insurance. Insurance comes later, right? But that co-man agreement is going to be your first layer of protection. So you really want to work with your attorney in drafting co-man agreements that put you in the best position to have some type of recourse against the co-man if they are negligent in the handling or production of your products.
So just to sum up the recall section before we move over to the next leg of the stool, supply chain, it's really the brand owner's responsibility, the CEO, to dig into the details of what the co-man has, what they can offer, and what the contractual terms will be for them to take responsibility for the process. And you can't just set it and forget it. It's something that needs consistent monitoring and
no. And the other thing that I would mention, any brand owner, if you're dealing with co-mans, is you want to be at least familiar with their food safety plans, because that co-man is an extension of your brand, right? And if that means that you hire third-party outfits to come in and do their own food safety audits, I think that would be a great thing to invest in. As a brand, it shows that you take food safety seriously and you're not just relying, oh, it's the co-man's issue. Because at the end of the day, it's your brand in the marketplace. It's the product that you sell. So there is going to be some responsibility on brand owners, even if they use co-mans, to ensure the safety of that product. The other thing that we work with our clients on is making sure that you have well-written recall plans. A lot of brand owners who don't manufacture their own product, they don't think they need it. But again, when you look at FSMA, the Food Safety Modernization Act, you see there's a lot more onus being placed on all food companies within the food supply chain to have a written recall plan that's not only on file, but that's practiced, right? So to go through mock recall drills. Again, going back to product contamination, product recall insurance, one of the benefits of this coverage is that a lot of these insurers will actually come in to help companies go through mock recall drills to help them prepare for hopefully a scenario that never happens. But again, if you do find yourself in a scenario like that, you want to be prepared. And there's nothing better than going through a mock recall simulation to be prepared.
Great stuff, Michael. Thank you. We're going to now move over to the third leg of the protection stool, which is supply chain. Our founders have made a huge investment, and sometimes they've gotten Series A or other investors to come in with them and make huge investments as well in their inventory. What do the founders need to do immediately to protect that investment, to make sure that if something unforeseen or even predictable happens, that investment's protected?
Yeah. In my 20 years of focusing on food and beverage, the number one cause of loss from a frequency standpoint is something happening to food inventory. While in transit, while in storage, while at a co-man facility. So we're talking about physical damage to your inventory. And this is a critical area of risk because the values exposed, they tend to be your greatest concentration of values. In many cases, the value of your inventory sitting in a warehouse can far exceed the value of any other property that a company owns, such as their computers and desks and chairs in an office. So what we have done, and Brad, you and I have worked tirelessly looking at insurance policy options out there for food inventory. And for the most part, we arrive at a conclusion that the coverage being offered, the off-the-shelf coverage being offered for food inventory sitting in a warehouse or in transit, it just stinks. There's no other way to put it. It's far from providing the coverage that's necessary. So what can food and beverage executives do? I think it's key to work with a broker. Foa Son, we have an expertise in this space. I'm not saying that we're the only one in the country who understands food and beverage, but we certainly have an expertise in this space. But I think you need to work with a broker who understands what can happen to food and how it can become damaged. You need someone who can identify those risks with you and then design coverage that will respond appropriately. What we have found is that you really need to look outside of traditional insurance products. And that's what we've done.
Let me ask you, while you're talking about that, again, the co-manufacturer process is integral to the success of many people in the natural network. I don't know what the percentage is, maybe Adrian can chime in, but my guess would be more than 80% of the successful emerging companies are using co-mans. And so what's their responsibility with respect to ensuring the goods while it's in their incoming, in their receipt? They've got the raw goods, then they're producing the product, and then they've got the finished product. And so they've got control of that whole process. And what responsibility do they have for our value? If I'm the CEO founder, what responsibility do they have for my product while they've got it?
Yeah, well, let's cobble a few things together, right? So we have co-mans, but we also have third-party common carriers, truckers, right? For the most part, our clients are using common carriers. They're not using their own trucks. And for the most part, our clients are using 3PLs, right? They're using outside storage facilities. They don't have their own storage warehouses. So when you look at all of these entities in the food supply chain, that are handling your goods. They're in other parties' care, custody, and control. What you'll find is that those entities, they don't carry insurance on your products. What they carry is liability insurance to protect them against claims that they damaged your product. So what does that mean in real life? It means that if there is no negligence on behalf of the co-man, if there's no negligence on behalf of a trucker, if there's no negligence on behalf of a warehouse, you, the brand owner, you're going to get nothing from those companies. So what are situations where there wouldn't be negligence? Hurricanes, windstorm, earthquakes, a number of other scenarios, too many to list right now.
How about this? Change in temperature.
Yeah, so change
a warehouse through no fault of their own could lose their AC, and it could be a power surge. It could be HVAC units fail. Things get old. Things don't work. No negligence here. Just stuff doesn't work.
Well, look, I think it's a good point. I mean, for anyone dealing with temperature-sensitive goods, the risk of change of temperature is the key thing that we really focus in on. And in many change of temperature events, could you make the case of negligence against a third-party warehouse or trucker? Sure, you can make the case of negligence. It's still an uphill climb. But I think it's also important to understand, even if you, the brand owner, were able to prove negligence, what would you get? And if you look at any of these warehouse agreements, co-man agreements, they usually limit their liability, right? They limit their liability contractually to, and the most common thing that we'll see is 50 cents per pound, right? So if you're selling a product that has a selling price of $15 a pound, even if you were able to prove negligence, you're going to get 50 cents on the pound. So it's
like if you hired a moving company and they broke your stuff, then you unfortunately find out that the moving company is not going to pay you very much.
That's
either.
right. And look, putting ourselves in the shoes of a warehouse, I understand why they do that, right? They don't have a working knowledge of what the value is that they're dealing with. So how do they get their head around their own exposure? They limit it on a price per pound, right? So I get why they do it, but I think it's very important for brand owners to understand, hey, this is why I need my own protection, right? I cannot rely on my co-man. I cannot rely on my warehouse to step up and make me whole. Have your own protection, and when designing that protection, make sure it's an insurance verbiage that's going to provide you with the protection that you really need for your unique scenarios. And the way we do that, Brad, is we really design inventory coverage from the ground up. We don't rely on off-the-shelf insurance offerings. We build our own verbiage that will address the various exposures that food and beverage products face.
So I want to take a quick pause here and check in with Adrian and the rest of the people signed in to see if there's any questions that anyone has. I've got some questions for you, Michael, but I'd love to take this pause and say, do we have any questions that we want to answer?
I haven't received any yet, but anyone is welcome to unmute and ask a question if they'd like, or drop it in the chat.
All right, great. So Michael, let me ask you this. We talked a lot about the coverages, the three coverages that are necessary. You've got liability insurance, you've got recall contamination, voluntary withdrawal issues. We've got coverage for that. And then we've got coverage for your product, your supply chain in every facet. What should brand owners expect in terms of cost? What we've seen is overall, as brands grow, the cost per sale of per dollar goes down, but what should they budget for, and what do you see the cost coming down as they grow? So if they go from, let's say, $1 million a year in sales up to 10 or 20 or 30, do their insurance costs drop, and by how much, and what should they anticipate kind of out of the gate as a budget?
Sure. I mean, look, you and I work hand in hand, so you could answer this probably just as well as I can.
Yes.
Yeah, this Q&A format, it's a little funny considering that we're partners in this, in our food and beverage practice here. So I may turn this back to you because I don't know if I can answer that very well, right?
Well, I'll give you an example. We just did insurance for one of the Naturally New York brands that's got a beverage product, a revolutionary, I think, and in the minds of others, beverage product. And, you know, what I would say is that a lot of it depends on your supply chain, where, you know, how many different co-mans are you working with? How many different locations, 3PLs, warehouses are you in? How much product are you insuring? But, you know, what I would say out of the gate is start the conversation early with your broker. Talk about what the exposures are. How many, you know, are you bi-coastal? Are you covering 3 states or 48 states, for instance?
Yeah.
And that's going to impact the cost on insuring your supply chain. But there's a benchmark that you and I have talked about, which is that it shouldn't be more than 1% of your sales.
Absolutely.
And we found that to be roughly true regardless of the product and all of the other factors you and I just talked about. You know, how many places, you know, how many different channels are we doing direct to consumer? Are we doing through UNFI or other channels to get to retail? But the reality is the product is the product, and the value is we try to insure up to selling price of the product. So, you know, 1% is kind of this target. We try to stay under that threshold. Sometimes for new emerging brands whose sales are under $1 million or under $2 million, that might be higher, and will often be higher in the first year or two until their sales ramp up. But as their sales ramp up, the cost per unit will come down pretty significantly.
Yeah, absolutely. And look, I think a lot of it has to do with the safety of the product, right? If you're dealing with a ready-to-eat food product, you know, it may warrant a little bit of a higher premium from a liability perspective, just because there's an additional food safety risk there. But it also goes to the quality of the information that we're receiving, right? As brokers, we're an extension of our food and beverage clients. We are their representatives in the insurance marketplace. So if we can bring a really solid risk control narrative to underwriters, it really does help us manage the overall cost of insurance for our clients. When it comes to supply chain insurance, right? You know, we're talking about the risk of, you know, let's say temperature sensitive goods. Hey, what is the risk control narrative that we can bring to underwriters when it comes to monitoring the cold chain, right? Is the client that we're working with, are they working with reputable third-party warehouses who understand how to store refrigerated goods well? Do they have backup generators just in the case of a power outage where they can keep the temperatures where they need to be? Are they using time temperature recording devices to monitor temperature during the transit of these goods? Right. These are all the other, you know, facets of risk and risk management that aren't going to be captured on an off-the-shelf application from an insurance company. And that's where we really, you know, we love getting into the weeds with our clients to collect that information so we can really tell a great story to underwriters and get not only the best coverage terms, but at the best possible price.
Yeah, so I guess, you know, kind of just to continue the conversation, it sounds like for the brand owners that work with co-manufacturers, the devil is in the details of what are they doing and what are they required to do in terms of responsibility back to the brand owner. And so the sooner, I think what you're saying is the sooner you have these conversations with your attorney and your broker about what you can do to prevent loss and what you can do in terms of holding other parties responsible for losses, those are kind of the critical areas that you have to deal with up front before you sign the agreement and before you get into bed with a co-man, because once they're making your stuff, it's hard to detangle that and switch.
Yeah, I'm telling you, I mean, you know, the way that we work with clients, it may sound counterintuitive since we're insurance professionals, But we try to work with our clients from the mindset of what would you do to control the risk if insurance didn't exist, right? How can you control the exposure and bring it down to the lowest possible level, where maybe you get it so low that you feel you don't even need insurance, right? That's the story of risk management and loss control that we want to bring to insurance underwriters to get them to say, hey, this is a great company to be on. We want to take this risk, and we're going to be competitive in our pricing and our coverage offering. So absolutely.
You've had a lot of situations with your clients where there have been recall events and a lot of near misses as well. Has there been a situation, it could be recent or it could be further on back, where you were able to talk to a client and help coach them through a situation and avoid a recall or avoid a large voluntary withdrawal of product? And maybe you can discuss a little bit about traceability and what brand owners can do in terms of keeping track of their product to help in their food safety plans.
Yeah, I mean, I'll go back to the situation. Unfortunately, there was a client of mine who did suffer a $2 million recall loss, but it could have been far greater. This is going back to, it's a very well-known recall involving frozen vegetables, where, and I won't get into this now, but it had to do with whole genome sequence testing. And it's a really, if you're not familiar with whole genome sequence testing, I would recommend looking into it. But there was a recall of frozen veggies from a producer out on the West Coast. This producer, they sold their frozen veggies mainly as an ingredient in other companies' finished goods. So we were able to limit the recall to 2 million, when our first thought was that the recall could have been as much as $10 million worth of product. And how do we do that? We did that through, Brad, if you can mute yourself, because I think I'm getting reverb again on your side. How do we do that? We did that by bringing in this crisis consultant firm through the Contamination Recall Insurance Company. And we did it through fantastic traceability work to determine exactly what adulterated raw material made its way into which finished good that my client was selling. It took a lot of work to create that traceability timeline, or just to show here was the adulterated product and here's the products that it went into. And it came down with just specific lots of that raw material. Had we not been able to do that traceability exercise, that recall would have ballooned into $10 million worth of product. So again, looking at your traceability, just understanding, if you're faced with a recall, that you're able to track that product, right back to the specific products that it went into. So yeah, I would say that was, even though it resulted in a huge loss and we had to remove 2 million from the stream of commerce, that was at the end of the day a big win.
Yeah, so sometimes just being in the right place at the right time and heading off something that could get much bigger and that's where having the recall insurance and having experts at your kind of 24/7 beck and call can make all the difference in the world, right?
Absolutely. In this case, having the experts that came in, it was an $8 million value. I think we do have a question in the chat.
Yeah, I have a question from Scott about in the CBD food and beverage space that they've been met with absurd insurance costs around insurance when working with larger companies. And what's our advice on that? I guess I wanted to peel the onion a little bit. Maybe Scott can unmute and tell us what.
Hi guys.
Hey Scott.
So yeah, we've been met with when stepping up into larger distribution spaces, we've just been met with to me it kind of looks like gouging of insurance, because they give us one number and then they raise it and they raise it again and they raise it again, And and we've had just absurdly high, especially on liability insurance, asks. And so we've been asked for $12 million of liability around a nice cheap product. So it's a little crazy for us sometimes. And so I just wanted to see if you guys had any advice on that.
So the audio on my end, Scott's a little blurred. I don't know if I got your entire question there. I heard $12 million. Is that an insurance limit request that you're receiving from someone?
Yes. Is my audio a little better now?
Oh, it's 110% better. Thank you.
Awesome. Yeah. So we've when we've moved up to our larger distribution partners now, we've been met with these absolutely absurd insurance asks, and that was $12 million. You heard me correct. And so I just wanted to see if you guys had any advice for we're a new category moving into this space. There's a lot of innovation happening, but there's also a lot of things, particularly with the big guys. There's a lot of hesitation there, and stuff like big insurance costs have been hurdles for us. So I just wanted to see, if you guys had any thoughts around that.
Yeah, I mean, look, it's very hard. We've seen a lot of our clients in the space, and our first recommendation is, hey, can you try to negotiate those contracts down, right? Can you see if they're willing to accept a lower limit, right? That's the first step. Now, we do know that most of our clients who have gone that route, they've been unsuccessful. So you're still faced with going out there and finding $12 million worth of liability.
Yeah, we had to pair together 3 different insurers.
So this is what when we're faced with just needing to, swallow the pill and go out there and find coverage. We have access to hundreds of insurance companies that are in the umbrella liability space. What you'll find with CBD related products is that it's very difficult right now to find insurers to take that primary layer of coverage, right? So your first, $2, $3, $4 million, but then the industry kind of opens up a bit when you're dealing at the higher levels. Yep. So you really want to make sure that your broker is doing their due diligence in going out into the marketplace to all of these carriers to really find you the best option. Now, one word of caution though, we speak about the exclusions at the beginning of our conversation. We talked about exclusions in the liability space. One major exclusion that we're seeing on umbrella liability, excess liability policies that we just will not accept for our clients is a pathogen exclusion, right? And it's buried in page 84 of a policy, and you never see it.
Of course it is.
Or page 900 sometimes.
Right. So it's called a sometimes it has different titles, but for the most part, what it does, it denies coverage for any claim related to pathogens, bacteria, fungi, mold, and these are very common exclusions. But what we try to do for our clients always is either not have that exclusion at all, or get a carve back for any type of, if it's a product that's going to be consumed, there's a carve back for consumable products where that exclusion will not apply. So as, going out there and trying to get the lowest price on this, yes, it's very important. Otherwise it may not make sense for you to engage with that customer who's requiring you to hold that amount of coverage.
Yeah.
But if you do find well-priced layers, look for those exclusions because they're out there.
Yep. Awesome. Thank you, guys.
I would add one more just tidbit of advice to what Michael said, Scott, which is that sometimes there's a creak in the armor when you're dealing with multiple large companies. So let's say KHA and UNFI and maybe one of the other large distributors, and you're working with more than one of them. If you can get one to say yes, often they'll all fall in line, like dominoes in the sense. And I think we're headed in that direction on the CBD space.
Yeah, I mean, the big player that I'm mentioning, we're the first company in the CBD space that they've even considered and been able to bring on.
Yeah.
So we're just the first one to check all the boxes for them in convenience.
Yeah.
And so that's really the space that we're going after, is the convenience space. So,
Got it.
it makes sense in some respect, but I mean, it just doesn't, like what they're asking for is crazy.
Yeah, and I would definitely agree with what you're saying, in the sense that what we're seeing on the beverage side is, I feel, and Michael, I think, agrees, is that 1+5 is probably enough to make both the retailers and the wholesalers happy on a beverage that is, benign. And I think that most of the claims that anyone would make in the CBD space for product liability are not product liability claims. And what's happening is there's confusion in the marketplace. Labeling claims might be something that they should be more concerned about, but that we could talk offline about that. That's something that, may not be covered.
I'd love to follow up with both of you. I don't want to take up too much of the time here. But
Yeah, but I would say, trying to get one person to say, any wholesale operation to say yes to 1+5, and then you go to the others and you say, well, the others are giving me 1+5. Why are you making me do 10+2?
Yeah.
But we could talk offline about that and some strategies that have worked for other clients, and I'm happy to help. And so is Michael.
Awesome. I really appreciate it, guys.
you're welcome.
I'll follow up with you both after this.
You got it.
And any other questions that we have? I don't think anything else is in the chat room. I think that, I appreciate your question, Scott, because it opens up an issue I was going to ask Michael about, which is, Michael, when you're advising your food and beverage clients about how much to buy, the limits, talk a little bit about the risk for various types of food companies, because as you say, some have greater risk of contaminants or change in temperature, and others are much more benign, shelf-stable products, and maybe, they don't need as much insurance. What are your thoughts around that?
Yeah, I mean, look, I think when it comes to property coverages, so going back to the third leg of the stool that we discussed, and you look at your inventory exposures, it's pretty easy to figure out what limits you need, right? You look at your major concentration of risk, which is typically your warehouse exposures. What's your max peak season value, right? So we know how to peg that number. And like you said, Brad, when dealing in insurance in that space, we like to insure for selling price, right? Because if you do have a catastrophic loss at a warehouse, it's as if you're making the sale to the insurance company. You're walking away with your profit, not just your reimbursement, your cost to repair and replace. When it comes into contamination recall, what I tend to focus on is production size, right? So, because that's really, for the most part, unless you have a co-man that's not doing proper cleaning in between production runs, that's pretty much going to be your max exposure from a product value when it comes to contamination and recall.
Does traceability come into play as well for you in terms of this, what might be the worst case scenario?
Well, it does. So again, going back to a scenario where, if you're bringing in raw materials from a third party supplier, right, and that those raw materials, let's say one ingredient goes into, 8 different SKUs that you produce, and those SKUs are shelf stable, that changes the equation, right? So these are all the things that we're talking about, from trying to get our head around what's the appropriate limit. So once you kind of nail in, hey, what's the max product value, then you can start layering in what's the profit related to it, what's the potential recall expenses related to bringing that product out of the stream of commerce, and then, hey, worst case scenario, what is the loss of profit if we were to lose our major customer, our top customer, for 12 months, 18 months? So then we start to be able to define what that max exposure looks like. Going back to the first stool, though, the first leg of the stool, liability coverage, that is where no one has a crystal ball, right? So a lot of brands will say, hey, like Scott said, my customer requires me to have X amount. That's what I want to purchase. But that doesn't mean that that's where your liability is limited. I mean, unfortunately, one of my biggest food safety events, it resulted in $20 million worth of claims, bodily injury claims and settlements. That's where over 250 people were infected with hepatitis from a contaminated food product, right? So in my wildest dreams, I couldn't have come up with that scenario. And just lucky enough, this was a larger food company. They did have limits high enough to protect them, but there's no startup brand that would go out there and buy $20 million of insurance. So liability insurance, that's an area where, it's a little bit of a dice roll as far as what limits to get.
Going back to recall reminds me of an example on a case we worked on with a chip manufacturer, potato chip manufacturer, where they had a recall on sour cream and onion chips due to contamination in the spice that they used to create the sour cream and onion flavor. And I remember that it was limited to a pretty narrow SKU. So the cost of the recall baked all in was not huge. But when we talked to the brand owner, we reminded them that they might be a little bit grateful that it was not a contamination in the salt, because if the salt were contaminated, every product they would have made in the last X number of months literally would have been, the withdrawal would have been 10X or 20X what it actually was. So you never know what the situation is, and you have to kind of,
and look,
no pun intended, bake in all of the potential possibilities when you're talking about how much insurance to buy.
Right. So, I mean, you have to look at the front end supply chain and how those raw materials make their way into your finished good. And then you also have to think about the shelf life of those products, right? How long can they be in the stream of commerce? Like if you're going to have something that's going to be consumed in a week once it's out there, your need for extreme limits is going to be reduced.
Yeah, that's reminds me of what the issues we've dealt with some of my wine and spirit clients, with wine importers. Their product could be on the shelf for decades. And sometimes great wine gets better with age, like you.
That's right.
So you have to have enough liability insurance, and most of them carry significantly high limits because the product and the brands they represent are in the stream of commerce and use for many years after they're imported or produced in domestically, either one.
That's right. That's right. Well, look, I think, are we running towards the end here, Adrian?
Yes, you have a few minutes left.
All right. Well, look, I think just to take this time to, number one, thank Naturally New York for allowing us to host this mentor hour. And for those on the phone and for those who are going to be listening to this recording, just to know that we're here as a resource, right? We're here to help you maneuver and navigate through all these various risks that brands face, and just putting together the right insurance solutions for those risks.
And I'll just add, Michael, that one of my great pleasures in working in the food industry for the past 30 years is that I think it's extremely unique in that the people who are in food and beverage cooperate with each other at a level unlike any other industry I've worked with. And I've worked in manufacturing, real estate, everything. But what I love about food and beverage is you might be a brownie manufacturer, but if you have some experience and there's a new brownie manufacturer coming up and they want to ask you, what have you learned? In this business, in food and beverage, it's cooperative. And I think that is really what Naturally New York about and the Natural Network is about, is that we're all here to help each other. So again, I appreciate Adrian and the Naturally New York group, and we want to continue to foster that spirit of cooperation and mentorship. So thank you.